right, thank you everybody for joining us today for a very special recording highlighting the Messari PayFi report, which has just been written, and to help us cover the PayFi ecosystem and learn a little bit more about what that is, I have two very special guests today. I have Erbil Karaman from Huma and Tomer Weller from Stellar. So gentlemen, thank you very much for joining me today. I'm really excited for the conversation.
Thank you,
Eric.
So let's get started. I'd love to learn a little bit more about the two of you and the organizations that you work for. And Erbil, I think we'll start with you.
Sounds great. Yes, I'm Erbil Karaman, co-founder of Huma Finance, the first PayFi network. For most of my career, I've been obsessed with fixing inefficiencies in every possible system I could find. About a decade ago, I was in charge of getting Facebook to 1 billion users around the world, and I realized actually 2/3 of the world don't even have internet or affordable internet. So I said, let's fix it. We launched internet.org, probably the most ambitious philanthropic project out of Facebook, to bring more affordable, more accessible solutions to the market. And after that, I got obsessed about transportation and fixing the same problems in transportation in the US. My wife doesn't drive, and it's a struggle for her to get to work, and it's not safe for her to utilize public transportation in the evenings especially. And I joined Lyft as a product executive to help solve some of these problems, make transportation more accessible, more efficient, more affordable, launching multimodal solutions like the bikes and the scooters and public transportation integrations. And then I got obsessed with finance and the problems in that area. Our last company, right before Huma, we were building Earnin, the pioneer in earned wage access in the US, and building solutions for people in a way like a payment financing solutions for people who are living paycheck to paycheck and don't have anything other than the payday loan providers to go to. So we build affordable, accessible solutions where they can access their earned wages right from their phone. And that's where we realized, the whole system is so broken that we had to build from scratch, and we have to build using the right technologies that would shape the next generation of finance versus getting stuck in the traditional domain. And that inspired us to build Huma, and happy to be here today to talk more about that.
Yeah, very excited. And I know there's a relationship between the two of you on what you're building and where you're building. So, Tomer, I'd love to hear a little bit more about your role, and, Stellar in general.
Sure. So hey, I'm Tomer. I lead product at the Stellar Development Foundation, which shepherds the development of the Stellar network. Stellar has been around for a while, since 2014, one of the earliest blockchains. Really focused on real world utility and specifically on cross-border payments, which I'm sure we're going to talk about a lot today. And, Stellar early on kind of like identified the ability to do efficient cross-border payments on blockchain, and Stellar was really catered for that specific use case across the stack. And in the past few years, we've been expanding on that use case, and we've actually launched a smart contracts runtime earlier last year, which Huma is actually building on. And so we're kind of like expanding this world of real world utility beyond just payments into everyday financial services, and would love to talk more about that.
Yeah, that's actually what, going through this report, speaking to the analysts, writing it, and really learning a little bit more about what PayFi is, because I think this is actually a concept that most people probably haven't heard of. It seems to be a newer sector. It's something where coming into this, I expected it to just be payments. I thought I was going to be learning about just cross-border payments, just payments. And Tomer, as you just mentioned, it's more so kind of rethinking a lot of financial services and a lot of what that stack looks like. So, I'd love to hear maybe from both of you, what is PayFi? What does it mean? And, how should we be thinking of it? Because I know it's not just payments, which is what got me really excited about this.
Indeed. When we talk about PayFi, the simplest way to think about it is to first think about what payment financing is and how it already appears in our lives every day. Payment financing is about the time value of the money. It's not about the money itself directly, it's the time value of the money. What it means is the money I can access today is more valuable than money I can access tomorrow. Why do you want this? You use credit card. And the credit card is one of the most common examples of how payment financing works. I need to buy something. but I want to finance it somehow because I don't necessarily have the cash. And the merchant wants me to buy it right now, and merchant wants to access that cash right now. They could have, agreed to sell me this when I have the money at the end of the month or next month when I get my paycheck. But no, I want to buy it right now, and they're going to get, paid right now. So this kind of payment financing, happens at a volume of $16 trillion around the world every year. And it's one of the major boosters of global trade, especially domestically. And then you go to trade finance. A lot of global companies, when they invoice each other, they don't necessarily pay each other immediately. There's like a net 30, net 60, net 90, sometimes net 120, and who knows when they pay. But these companies, especially in the supply chain, need to operate on very low, thin margins, and they need cash flow immediately. So they go to banks and financial institutions to put their invoices into factoring or financing so they can get paid immediately. And there's about $10 trillion of this happening already around the world. The B2B payments are being financed. And then you go to cross-border payments, and to make it happen, you need to pre-fund a lot of accounts around the world. We'll talk more about those mechanics. And $4 trillion is spent just to finance the movement of money globally. All of these are solutions that shaped already like the everyday lives that we have. And PayFi is just taking these concepts and putting it where it needs to be, which is blockchains and stablecoins, because those are built intrinsically for global payments.
Yeah, and I know Stellar's been doing a lot in the, cross-border payments and stablecoin space. So when we think about, obviously there are hundreds, if not thousands of blockchain networks, layer ones, layer twos, whatever it may be to build on out there. Tomer, how do you think about just Stellar in general and that focus on cross-border payments, on payments, stablecoins, and the thing it sounds like is what actually helps power Huma today?
Sure. So if we take a step back for a second and think about what a cross-border payment on a blockchain actually is, this is something, probably the first practical use that the world of blockchain, specifically Bitcoin, ever saw, which is in the early mid-2010s, people realized that if you have a global supply and demand for Bitcoin, you could actually buy Bitcoin on one part of the world, send it to your family in Israel, for example, have them sell it in the local currency, and bam, you have like a cross-border payment, right? And, people have actually been doing this for a while, but there's a lot of inefficiencies that are involved with that. Obviously around, Bitcoin volatility, the time of transactions, and then how do you actually get value in and out of the network? So Stellar was really built from the ground up to solve a lot of these issues. For example, it had stable coins baked into the protocol from the ground up before they were even called stable coins. Back in the day, we used to call them reserve-backed assets. There was a decentralized exchange baked right into the protocol, so you can have kind of like efficient currency exchange right there. We've also built a set of interoperability standards for on and off ramps, so that to help solve one of the biggest issues of blockchains, which is how do you actually bring value in and out of it? We've building that for a while. We're seeing strong product market fit in this area, both on the back end of payments, which is, for example, we're going to talk about the RFuse case, I think. We're also seeing like strong product market fit in terms of like the last mile. So being integrated into user-facing wallets like RTM that provides payment services for more than, I think, 600,000 active users right now. We have wallets like Decaf that are serving rural communities in Latin America. We have, for example, a project that we're doing with UNHCR for dispersing aid for refugees in Ukraine. And this is going on live right now. So there's a lot of product market fit there, but there are still some market inefficiencies. And I think that if you look at what Erbil and Huma are doing, it's really about taking the part of payments that are still happening off-chain, which is the financing part, bringing it on-chain, and both, giving people access to that, both on the borrow side, but also on the lend side, and helping generate, yield that is more sustainable than the regular crypto casino speculation house.
Yeah, speaking of yield, I'm actually curious, and I know we cover a lot of this in the report, so everybody can read all about it, but what are some of the metrics that you're most excited about that you're seeing on Huma right now?
Definitely, when we look at what we do, we first talk about, okay, what is the impact of what we do in the real world? So many different ways to look at it. We start with the user stories and what we really do and how it really helps the different people and businesses across the globe. And then we usually talk about total number of PayFi transactions happening through the network. Because if you're a network, the utility of the network is only valuable when people use it. And the main measure of people using it is, are they transacting on the network or not? And so far we have done $2.8 billion of PayFi transactions, and it's just growing at a very rapid pace, only limited by the amount of liquidity available in the market PayFi network at any given time. And we don't see any end to it, to be honest, because as Tomer mentioned, a lot of large real-world payments institutions seeing these inefficiencies want to bring their financing elements onto the PayFi network because they see it solving so much of the treasury problems, maybe their lack of access to various different traditional solutions that might or might not be available to them in different parts of the world. And then from there on, we look at how many innovative use cases are on the network, because when we built the network, we built this using this PayFi stack, which might be something we talk about later on, to enable as many different innovations as possible. Just like when you build internet infrastructure, you don't know what people are going to build on it, right? People who have been designing the OSI framework, internet frameworks back in 1960s and 70s, they would have no way of envisioning what would be happening 34 years down the line. So we've designed with simple principles, but similar principles to enable as many of these innovations. So we're so excited every time there's a new use case that comes up, and we're just like, where did this come from?
We were just talking about, Stellar's been doing this since, I think you said 2014, right? I feel like a lot of people have been trying to solve this cross-border payments, this payments problem, and just looking at the acceleration we've seen probably over year, 2 years now at this point with stablecoins and everything. I mean, you're starting to see PayPal, you're starting to see Stripe, you're seeing real adoption from Web 2 into Web 3. Because of stablecoins, you're seeing adoption in RWAs with, large financial institutions like BlackRock. I'm curious if, you think this is it, like this is the time where all of this is going to work. You mentioned all of the traction that you're already seeing on Huma. What is your take right now on that larger RWA stablecoin space? Are we actually there? Is this all going to start to work? And, is this the time that we actually fulfill that vision we've always had for crypto to be powering payments?
Yeah, I think the answer is a strong yes. And I think what we're seeing right now is we're seeing it coming from both directions, both from the blockchain DeFi space and from the more traditional RWA, traditional finance space. And there's like this interesting amalgamation that's happening right now. And I think that PayFi is a really strong example of that. Basically, obviously we've been doing payments for a while. A lot of it has happened in the past few years. And I think we've gone through this interesting, 360 journey where we've gone through all of these other use cases in crypto, and a lot is going back into payments right now, but we've picked a lot of tricks along the way, right? So I think that if you look at PayFi right now, it takes a lot of tech from DeFi, from the decentralized finance space, from trust minimized financial instruments, and applying it to more traditional financial instruments like payments. And I think on the other end, we're seeing RWAs, which at the end of the day, treasury bills are not exactly the newest financial instrument out there. But what we're seeing is these instruments are actually being built in a way that allows them to be a building block in this more modular, interoperable blockchain space. So, stablecoins, RWAs that are actually permissionless, that could be used in, liquidity pools like Huma's, that are providing people sustainable yield, but still in a trust minimized environment. So we're seeing this amalgamation. And I think that going forward, all these barriers, all these definitions of like TradFi, PayFi, DeFi, we're going to see a lot of these melt down, and we're going to see a lot more nuance, and there's going to be financial instruments. It's not necessarily going to be like a DeFi lending pool or a traditional finance lending pool. It's going to be a lending and borrowing pool that has specific properties. There's going to be a lot of gadgets and a lot of levers that you can pull into like what exactly is the level of trust minimization of this thing, how much is it speculation versus sustainable yield, and people will be able to make these very nuanced decisions about their financial instruments. But all these barriers are coming down.
You agree?
100% agree. What we're seeing is every single large trade market is understanding the value of the stablecoins, of the blockchain technologies and shifting as fast as possible their focus into that. And Stripe, Shopify are, amazing examples. PayPal is a great example. But even players like Amazon. What is Amazon? Amazon is first and foremost a payment company. They house a lot of goods. People pay for them, and they need to distribute those payments all around the world because their suppliers are all around the world. And we're working with one of the Amazon's payment partners right now because their biggest problem is something that can only be solved in this new conjecture in the PayFi domain. They need to make a lot of payments to their suppliers, and majority of their suppliers happen to be in Asia. But to get money to Asia, they need to first go from their US bank to their UK bank to be able to do FX operations efficiently. And then they need to go from their UK bank to Hong Kong bank to first get a proper hub to distribute. And then from their Hong Kong bank to different, Asia legs and banks and payment providers, just to like a simple payment to travel, to another place in the world, they have to go through so many hubs, and it takes so much time, so much money, so many people. It doesn't have to be that way. They can just push a button in the US and the money can be distributed, all around Asia in just a matter of hours. And they're right now building this solution with one of their payment partners on the PayFi network. And you will see more and more of this happening. Just today, we announced partnership with Lulu, which is one of the largest payment providers in Middle East, based in UAE. And they are transitioning all of their infrastructure to PayFi as well. And we'll just, continue to see more of that. Yeah.
Yeah, you don't have to tell me. I was before my days in crypto back in the day, I was a fintech research analyst, and I was covering a lot of the early payment apps, cross-border payment apps, all the things we were trying to do in fintech back in the day. And I think what drove me into crypto, honestly, was looking at the back ends and trying to figure out if this was going to work, and realizing you have a nice app, you have something that looks tech focused on the front, it's banks and all of that all the way down, and you really aren't moving things any faster. Things aren't getting any more efficient. And the cross-border payments example really is what resonated with me, right? It makes so much sense that something like a stablecoin, you can move between accounts, do it incredibly fast. You don't have to have correspondent accounts. You don't have to have all of this just overhead that you have from the legacy system. What struck me reading the PayFi report, learning more about the PayFi ecosystem is, the most interesting thing, or one of the most interesting things I think we have in the crypto and blockchain space, is composability and the ability to just piece all of these building blocks together. We were talking about DeFi and how that influenced and brought some things over into PayFi. So I'd love to kind of get a little bit deeper into how all of this works. It sounds cool, it's solving problems, but what does that actual tech stack look like? It's not banks, right? It's blockchain and it's stablecoins and it's RWAs. What does the stack look like for Huma that actually makes all of this happen?
So when we thought about how to build a network, the first thing we thought about is what is the best model to utilize to build this network, and how do we make it easy for it to be as composable as possible, for it to have as many different legs that touches both the traditional payment solutions, but also leverages the best aspects of blockchains without being stuck in one paradigm. And when we looked at, first and foremost, the 6-layered approach that we came up with, we call it the Open PayFi stack. On the first layer, you see the transaction layer. That's where you have all the L1s and L2s that are optimized for payment solutions. And Stellar is obviously one of them. Solana is another one of them. And you have more and more of these solutions that you can just plug in and it starts working. On top of it, you need the currency layer. You need the stablecoin layer, and you need stablecoins that can operate on various different chains and can have on-off ramp legs in different parts of the world. And that layer enables us to, and our partners and anybody who's building on a PayFi network, to utilize those stablecoins interchangeably. And then on top of it, you have enterprises who wants to use these solutions, and for them, you can't just tell them use MetaMask. You need to have proper custody solutions, and those custody solutions need to take into effect different needs that they might have, from how they move the money and how they do treasury operations. And you have solutions like Fireblocks that's plugged into the custody layer of PayFi stack. And then on top of it, in the compliance layer, because if you really want the whole world to adopt the solutions, you need to be able to properly KYC, KYB, KYT the transactions, making sure that there's no money laundering or terrorist activity happening on the network, and those are provided by various different solution providers and fits nicely on top of the stack. And then on top of that, you need the financing layer, and that's where Huma comes into play. We mainly provide a well thought out stack, but there are other solution providers who are building in the financing layer, trying to plug everything together and bring these yields to DeFi, so DeFi can bring liquidity in, and that liquidity can power more of the solutions to happen on the network. And on top of it, you just need to build applications, right? So you need to have the SDKs and the applications to build utilizing any layer and any solution on these layers in a way that it can all be composable. It can work on as many different chains as possible. Wherever the use case fits the right tooling, we are hoping that people can leverage the stack however they want. And so far we've seen many applications starting to pick and choose the right components and build things again that's like working cross chain, where they have some of their legs in one chain and some of the financing layers are working on another chain. Liquidity is coming from certain stable coins interchanged into sometimes hybrid fiat money, and pushed back through utilizing some other routes and on-off ramp OTC solutions. So it's all fitting nicely. And we don't think that we have all of the answers just yet, because obviously this is a huge effort we're undertaking. But with the partners like Stellar and Solana and others, we're making a lot of good strides and improving the stack every single day.
I just want to add something on that. I don't know if it's very clear from what Erbil just said, but payments are complicated. Like, payments are hard and they're messy, and where the rubber meets the ground, there's a lot of friction. And I think a pet peeve of mine is sometimes that in the crypto space, you have, people tend to think that changing a number in a database row constitutes a payment. And unfortunately, that's not the case, okay? The journey that value moves from your wallet here in New York to a falafel stand in Israel is quite the journey, and changing a line in a database, maybe in some utopian future we'll be there. We're not there right now. The greatest value in blockchain is providing an interoperable platform so that people can build different components that are interoperable with one another. And I think this is the beauty of this payment stack that Erbil is describing, where different companies and different people can optimize different areas of the stack. And then there's this network effect where the more components you have, and the more efficient you have, and the more specialized you have, that way the overall efficiency of the ecosystem increases. So, let's say you have a wallet that's active in Nigeria, let's say right now they're using, the MoneyGram on and off ramp for cash. They could easily migrate or add, an integration with Link, which is this remittance agent in Nigeria, because maybe they have, better rates for specifically integrating with the Nigerian banking system. But because they're all operating on the same network, you have this network effect where it's really easy to add these components and interoperate with others.
Yeah, and one of the things that interests me, and we've touched on this a couple of times, is when you think about the composability, interoperability, and you just think about where a lot of the liquidity and capital is today in the crypto space, a lot of it in stablecoins, but obviously a lot of that in DeFi. So I'm curious, you mentioned DeFi being part of and attached to PayFi, but could you dig a little bit deeper into what the relationship is between DeFi and PayFi?
Definitely. This is actually a big focus for us in 2025, because DeFi has operated on a set of premises and a set of components that didn't necessarily touch RWA or payment solutions as much. And the biggest bottleneck there was you don't necessarily have a token that represents the payment obligation, or what you might call the asset in DeFi. And we're working to change that. We're working to create this payment assets that has real value in DeFi, that has real liquidity in DeFi, so that you can actually trade them on DeFi and you can get liquidity in, and you can use these real world payment financing operations where you charge either on a transaction basis or some other interest basis, and that fee can float back into the DeFi as yield. And that yield can compound very rapidly. So let's think about a very simple example where you make a payment and you get charged, let's say a 1%, 2% fee, like a credit card fees, right? Can go up to 3%. Remittance fees can go up to 6, 7% sometimes. Let's keep it simple. Let's say, you get charged a 1% fee on a payment financing operation. And let's say you can actually use this capital because this capital is so efficient and it's digital and can actually turn around as many times as you want in a given year. Right now, we're able to turn capital up to 100 times a year, but you can create, solutions where this can go up to 300 times a year, which means, 1% every single day of the year, compounding throughout the year and generating a very hefty yield for DeFi. And DeFi loves yield. So that's one mechanism, that's a simple mechanism to introduce this interaction between PayFi, the asset component of PayFi, and how you collect that, fees and turn them into yield and push it back to DeFi. Another component of that is the composability element. Right now, a lot of these solutions might not necessarily look like they are as composable because they're all happening in one corner of the ecosystem. But one thing DeFi is very good at is basically taking one thing from one place and pushing it to power strategies on different chains and different protocols. People needing to put liquidity on a Huma dApp might be a limited amount of people, but if people can put this liquidity on Aave, Compound, or Binance Earn, OKX Earn, Coinbase Earn, just changes the game completely. So by plugging into DeFi, I think both DeFi benefits from PayFi and PayFi benefits from DeFi.
Where are we in that journey right now? It sounds like we're early. Are people, are you starting to see DeFi applications, or, you mentioned Aave, or, some of these places that you could start to integrate? Are you starting to see traction there, or are we a little bit off from that?
Definitely. In a few months, I think we will see some of the big integrations coming to light because it has been a relatively big effort from our perspective, and we focus more on the foundation first, right? The foundation of the stack and how to get all the elements into it nicely working. And now that it's in place and it's working and there's a lot of money transacted on the network, I mentioned $2.8 billion today, and it's just growing rapidly. Now you have something, a fire hose that you can basically turn around and plug into different, components within the DeFi ecosystem. So in just a few months, I think we will start seeing this appearing in a few ecosystems. And once that happens, again, DeFi is so efficient. You just need to integrate into a few common components of DeFi, and it just starts appearing everywhere else.
I'm curious, what's the most exciting use case? I know PayFi covers quite a few things, but if you had to pick, I know this is hard, but what are you most excited about? What's the problem that you're solving?
I'll just, I've definitely, like I said, we've gone a full circle, and we're back in the world of cross-border payments. I still think that this is the area in which we're seeing like the strongest product market fit right now, or we've definitely done the 0 to 1. And I think now this ecosystem needs to scale, and there is definitely room for a lot of impact in that space. So I think, especially around cross-border payments and financing cross-border payments, I think that's a really big one. And the other one, like Erbil said, I think right now we're in this weird place where there are these two extreme. There's either DeFi, that's kind of like very adventurous, very speculative, CeFi, TradFi space, in which you have like the more traditional financial instruments, and there's a whole spectrum in between that needs to be explored in terms of providing everyday financial services for people. And I think that PayFi specifically, and also real world assets that are more DeFi friendly, are where we're going to see a lot of innovation in the upcoming future. And it's really about kind of like filling in the gap between these two worlds.
That's definitely one of the most common use cases that we see, but the one that's most unique, I think, is more in the deep in financing side. So deep in decentralized physical infrastructure, actually quite suitable to leveraging PayFi, because the biggest bottleneck in deep in is that it usually bets on the network working at scale and being economically viable at scale. But there's this huge bootstrapping problem and chicken leg problem that you have at the beginning. You need to put capital into it. For the capital to generate a productive asset, and the product assets basically pays back the network. If you think about Bitcoin mining being the biggest deep in operation, you need to be able to make sure that you can afford, first of all, a mining rig, and that mining rig can pay you back, over time. And most deep in projects have a similar mechanism in play. And with plugging it into PayFi, you can actually tokenize all those revenue streams, future revenue streams, and make sure that anything that the deep-in network requires from a capital expansion perspective can be financed, and those royalties can be plugged back into the liquidity pools that have been supported the capital at the first place. And we have Rome that has launched their first deep-in financing solution on Stellar and in Huma recently, where it's one of the most innovative wireless network solutions, that they have these Rome devices that you can install anywhere you want in your office, in your home network, and it plugs into this like global mesh network. And all of them comes with a CDN and a VPN solution built in. So they're actually helping get more revenues for the network by being part of the CDN and VPN network. And those revenues are now, plugged back into the PayFi pools that are supporting the distribution of these ROM devices, because ROM devices are being partially financed by the PayFi ecosystem. And they can go from 1 million users to 10 million users, because now they can tell people, what, put 25% in, 75% finance, and that finance portion, you don't need to take any money out of your pocket. It's all going to be paid by basically the network being productive and plugged in and working on its own and doing what it needs to do. And we're seeing another version of it in the energy sector. We are seeing that a lot of governments, for political reasons, are not funding energy projects anymore, especially if they're more traditional oil and gas energy projects. But these are like massive projects that has royalty guarantees, like payment guarantees, 10 years, 20 years down the road. And PayFi is one of the perfect solutions to finance them on chain, bring liquidity on chain, consolidated, help these projects to succeed. And those royalties can be tokenized and pay back the liquidity pools with greater yields than what sometimes DeFi can offer to the retail user or the institutional user. And we're seeing OnFund, one of the examples in Middle East we're working with, turning this into a reality. They're actively working on building their whole stack on PayFi and on Huma to make this a reality. And that can just change the whole energy sector, because the whole world, especially with AI being so important, is struggling to get enough amount of energy, and we just need to finance more energy projects.
One thing that I disagree with Erbil on, I definitely agree that in terms of these funding these like massive projects, that's PayFi is definitely well suitable for. I think the deep-in space as a sector, if it proves itself as a viable sector, then yes, I think that PayFi is really suited for it. I don't think we're there yet. I think we haven't seen the 0 to 1 on the deep in yet. I think there are a lot of what you see right now is speculation on what potentially could be. A lot of it is fueled by speculative tokenomics. And I think that at the end of the day, there are, especially around kind of like these massive like hardware projects, there is value in the economies of scale that large players provide. And so I'm a bit of a deep-in skeptic, but I'd love to see how that plays out.
Yeah, I think deep-in's a really exciting concept, and I know our research team has written a lot about it. So, if it works, I think PayFi sounds perfect for it. But, when we do think about the dependencies and we think about the headwinds, I'm curious, what do you think the biggest challenges are right now for scaling the PayFi space?
Anything that's so new first has to be well understood to be adopted. So I think that's probably true for PayFi as well, because it's so new. We have to have this conversation and really explain the benefit of PayFi, what it is, what it does, the use cases. So that's probably the number one bottleneck, because once you get to the use cases and people start to understand those use cases are impacting everyday businesses and people, there's no bottleneck, because there's almost infinite amount of demand around the world for payment financing. It's just a matter of making sure that we work really hard on the infrastructure side, on the application side, to make all of those use cases work as seamlessly as possible. on the blockchain networks using stablecoins, sometimes without even people realizing that they're actually using blockchain and stablecoins. So those inefficiencies that are built in to the use cases and how you need to use today a wallet to actually send money and need to understand what a network address is, once you remove all of that, it just works. But we need to remove all of that. And we need to work with the whole ecosystem to remove all of that. So that's, I think, the more like internal challenge of PayFi. But I think unlike most other speculative aspects of crypto, this one has a very clear use case around the world and has, giant amounts of demand around the world. And the more I think we make those experiences smooth, the more of that use case, starts flowing into PayFi.
Yeah, that's actually what resonated with me reading through this report. I'm a skeptical person by nature, and I think when you start to see the actual use cases and you start to see that this is an ecosystem with projects that are doing real things, you start to understand it a little bit more. It becomes interesting. I think one of the projects that was actually highlighted in the report that I did want to ask about was ARF, I think it was, and I'm curious, what they're doing and how you think about that.
You're the big ARF guy.
All right. So just to be clear, Huma and ARF as entities merged last year. ARF was one of our biggest partners and clients operating on the Huma network. And they've been working on the Stellar network, providing cross-border payment financing or global payment financing. The reason why you need that is in a traditional world, in today's world, if you want to send money as a business or a human being to somewhere else in the world, that money has to go through so many intermediaries, and that money cannot travel physically from one country to another. So as an intermediary, I need to keep accounts all around the world to make sure that if you want to send money to Mexico or Turkey or Israel, I already have accounts with money in it, in a different currency than usually what's being sent to be able to settle with my local partners or the end user and the beneficiary of this money. And that requires $4 trillion in treasury operations, in hundreds of thousands of accounts in different banks of the world to be transacted and to be rebalanced on a daily or sometimes inter-day operations. That's a massive operation. It's very costly. It's very error prone. It doesn't work when you have banking holidays in either the origination or the destination country. And it causes basically us to pay so much money and make certain what we call corridors very hard to scale. ARF removes that requirement 100% because you can collect the money in fiat, but you don't need to keep accounts all around the world that has all this money pre-funded. You can just use a global liquidity pool that's funded on DeFi to transact and settle with your payment partners in stable coins, and they can make the distributions on their, fiat local currencies. That means you can settle any day, any time, without having any delays, without having any intermediaries, as long as you have access to this global liquidity. And this global liquidity can be used by tens of thousands of institutions and intermediaries and benefit hundreds of millions of people doing these remittance transactions and businesses who depend on this kind of transactions. And it's just like a complete shift, paradigm shift from what the world suffered from to what it could look like. And we have seen ARF growing so fast last year, faster than any other use case that we have seen, and we decided to just merge and put all of our resources together to build this network together.
And the important thing to note here, this is not wishful thinking, speculative. We think that this can happen. We're talking about $2.8 billion transacted using USDC on Stellar. This is actual, honest to God, product market fit at its finest.
That's rare sometimes in this space, right?
Definitely.
It's exciting though. I think we're in January right now. What does the world look like for PayFi January 2026?
So first of all, you asked about the challenges. So I will say that I've been working on the Stellar. This is my 8th year working on the Stellar network. Probably the biggest challenges are the unknowns, and especially with things like payments and financing and where the rubber actually meets the ground. This is not this is not DeFi. This is not code. It touches institutions. It touches governments. It touches regulators. Governments change. Regulators throw tantrums. Different parts of the world. We've had projects in different parts of the world that were days from getting launched, and then the government shut it down, right? And so I think we're at a good place right now with the U.S. government, and things are looking good. So I would imagine that a year from now, we're going to see a plethora of financial instruments that are related to PayFi. I think it's going to be, at least in our industry, it's going to become like a household name. And I think that in terms of actual adoption and the lives that this actually affects, we're going to see an order of magnitude increase. And these are people that are going to have no idea that this is happening behind the scenes, but maybe it will mean that they're getting their payments faster. Maybe it means that they're getting their payments cheaper, but everything is happening behind the scenes.
I'll make 3 predictions. The first one is PayFi yield will be available everywhere in DeFi, and I think people will realize that this is the new frontier of RWA yield because it can be way more attractive than treasury bills that unfortunately is on a declining trajectory right now from a purely yield perspective. And that might be the right thing from a policy perspective, but for people looking for yield, they need more than that. And I think PayFi will replace a lot of that next year. The second prediction is at least half of the largest payments institutions will have a leg in PayFi. Because it's just inevitable. As it was inevitable for Stripe to acquire Bridge, which was one of the first PayFi spotlights that we have showcased last year. It was inevitable for Shopify to accept payments in stablecoins, and it was inevitable for PayPal to start moving into that direction as well. It's just a matter of time. And with the regulations, especially on the stablecoin side, clearing out, more and more financial institutions are finding it easier to accept that they are ready and they're not taking a massive compliance and regulatory risk by just going all in this direction. So at least half of them will move on to the PayFi ecosystem and will have a leg in PayFi. And then the last one is, I think we're going to see some crazy crypto-only use cases. I know Tomer can be skeptic sometimes of these crypto-only use cases, but I'm excited about them, not because I think all of them will work. Some of them are speculative for sure, but you need speculation. Without speculation, we wouldn't have Bitcoin and we wouldn't be here. And I think that's what's exciting, that last year we didn't think about certain use cases that we're seeing right now. People are claiming they're staking rewards using PayFi in innovative ways, and next year we'll just see stuff that I think we haven't envisioned, and crypto will prove, and this composability will prove that it's what's going to drive more and more financial innovation, and everything we know about finance and how it works is just going to be questioned, one after another.
Yeah, I think it's gonna be an interesting year. I think we're gonna see a lot change in this space, and I know that this report that Messari wrote really is a great way to just get up to speed, learn about PayFi, and I hope for people it's an opportunity to actually learn about some of the use cases as well, see some of the data, what the growth has looked like. Outside of this report that people can read, is there anything else, any other resources, any events coming up that you think might be useful for people to check out?
So last year, when we announced the PayFi stack, we realized that we need to bring the ecosystem together more often. So we also announced PayFi Summit, which is something we put together with Stellar and Solana for the first time. And this year, we have 5 of them happening. The next one happening in Hong Kong around Consensus in February. And then in Token 2049, I believe Dubai is going to be the one after that. So we are hoping to see every single PayFi ecosystem or application or solution provider or anybody curious about PayFi to come and join. The first one, we had, I think, more than 1,000 people registered, and we expect more of that happening this year as well. And we're constantly looking to provide resources to the companies who are trying to build on the stack, and our partners across the board are doing the same. There are a lot of resources that are spent to just make sure that people are building the best solutions they can and having real impact in the real world. That's pretty much it.
Obviously I'm biased, but I think that Stellar's Meridian conference is probably, the biggest one from our perspective, because at the end of the day, Stellar is a bridge between, different financial institutions and different financial services. And I think that the Stellar Meridian is a really great opportunity to have both folks that are dealing with the real world utility, also a good amount of developers working on innovative DeFi, and also the degens and the creatives all in one space talking to another. And I think that that's kind of like the beauty of blockchain, bringing all these people in the same place that normally would probably not have any interaction. So we're seeing a lot of great collaborations coming from this event. We had the last one in London in October. The next one is going to be in October again. Location to be announced soon. Huma's going to be there for sure. And yeah, very excited about that one.
Yeah, I was at the one in London, so it was great event. Tomer, Erbil, thank you very much for joining me. This has been a great conversation. I've learned a lot about PayFi. For everybody else, you can go read the Messari PayFi report, get up to speed, and definitely check out some of the events where you can attend in person and learn a little bit more.
Thank you, Eric.
Thank you so much.
Thanks.